Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of natural gas. And so here I am recording this on Thursday, November 21st, after the market has closed. And it looks like natural gas is currently trading right around $3.48.6 or $3.50, which at the beginning of the year, I talked about how that was the forecasted average for the year, and we've spent pretty much all of the year below this level. But we did test it today, hitting a high of $3.57.7. But with that being said, I think it might be time for a pullback in natural gas, so I did want to go over that. As previously, I was kind of expecting price to be coming down from here to this golden pocket here, that is the 618 down to the 65% retracement, right around $2.40, but we did not see that. Instead, we got a break higher. But, it does look like we could be bumping into some resistance there. And also, before I take a step back to show that level that has served as prior resistance and support, I believe, in the past. If we do look at the RSI down here, something that stands out to me is that, we have been putting in a higher high here in the price, but then over here, the RSI is a lower high, and that is actually bearish divergence. And then if we look back over here, we do have this trend of lower highs in the RSI, whereas, this is a higher high than over here, but this is a lower high compared to what we are currently seeing. And so that is another sign of this bearish divergence, higher highs in the price, lower highs in the RSI. So I definitely think that could be suggesting that a top is in and or very near for natural gas. And so if I do take a step back, we can see that we did see this double top here right around 350. That was around the end of October of 2023. And then taking a step back even further in time, over here, this is around the end of the year of 2021. We did test 350 over there. So, that prior support then becomes resistance, and, it may very well be acting as resistance again. So very good to be keeping that in mind. And over here, this was resistance. It became support. So, I do think that $3.50 is a pretty notable level. So if one is long natural gas right now, might be a good time to at least trim, take some profits. And it might be also good to look into shorting natural gas. And so one way that we can do that is with ticker symbol KOLD, which is 2x leveraged short natural gas. And so we can see here that it closed on the day today, on the 21st, at a price of $55.40, being down about a little over 5% on the day, bouncing a little bit in the after hours. And it does look like it bounced on this yellow line that I've drawn here at $53.95. Also, I have this alert here at 54 cents, did pierce that, bounced, and closed above. And so one of the reasons why I have that level marked there is because it did act as a bottom over here, acting as support. Might get a bounce like we are currently seeing. And then also because it did act as prior resistance going back here to the end of May earlier this year. That was resistance before pulling back, going above, and then retracing at the beginning of October, testing that level. So I could definitely see this bouncing perhaps up to the lows that we saw over here, right around $65 a share, or maybe to fill this gap here, which would be kind of an extreme scenario, but that close for the day on November 8th was at a price of $82.81, as you can see marked there. I'm just going to make that a dashed thick blue line there so we know that is a gap. Lock that into place. Maybe price does head back up to there. But another thing that we can do is do a Fibonacci retracement going from the high over here from November 1st down to today's low. We've got these Fibonacci levels that might be acting as resistance, that could be targets for where the stock price could be going. And so here we've got the 382 that is at a price of $64.41, corresponds very nicely with the lows from October 25th at a price of $64.55. So I could definitely see that as a very nice level to do a swing trade. Going from today's price up to that level represents about a 15% swing to the upside, so pretty nice there. The next level up is the 50% retracement at a price of $68.15. So might also be a level we could be heading towards. And then above that is the 618 at right around $72. And then above that is the 786 right around $77. I could see it going to any of those levels and even getting up to that gap, and getting up to fill that gap would be a swing of right around 50% to the upside, so very nice there. But also, as it does get higher, it does get riskier, so might be good to consider that when we do start to get above $64 a share. And then other ways to trade natural gas, there is BOIL, which is 2x leveraged natural gas. Like the chart of natural gas over here, I do think that while this is not a higher high, this is going to trade corresponding with the chart over here. And since there is bearish divergence, since we did move up to a technical level that will likely be acting as resistance, and maybe this only pulls back to this level here, right around $3.14, double top over here, and this resistance might be acting as support again. If we do get a measurement from where it's at right now, that represents a drawdown of about 9 or 10%. So good to kind of take some risk off the table. And from over here, that could be representing a downside move from the closing price of $51.38 to right around, let's see, $47.41, that being about an 8% move to the downside. So good to keep an eye on that. Maybe we find that as support, but maybe we do retrace to lower levels. And so if I do a Fibonacci retracement here, let's see, the 382 corresponds pretty nicely with right around $47, corresponding with the top over here. That might be acting as support if we do pull back and then bounce, but it could be coming lower to the 50%. That would be right around $44.69, fun number there, or the 618 at 42, right around 50 cents, or perhaps worst case scenario, the 786, that is right around $39.50. But we also do have a gap over here, just like we had a gap with KOLD, with KOLD. It looks like this gap would be coming down to the close on November 8th. That was at a price of $36.03. So I'm just going to adjust that to that close over there and make that again blue dashed thick line, so we know that there is a gap there. Price could be coming back to fill that, but gaps do get left behind, so good to consider that there. And then finally, we can also be trading United States natural gas, ticker symbol UNG. This is not 2x leveraged, whereas KOLD and BOIL both are. And so I don't really find this one to be that appealing to be trading, just because you don't really get that leveraged exposure, which I think makes up for a lot of the contango that you would get with trading these futures ETFs. As far as I understand, so I don't really find UNG to be that rewarding. I would rather be in a leveraged ETF, like either KOLD for shorting or BOIL for going long. But anyways, with UNG, we can see the highs over here from October 25th, right around $14.50. So I could see that acting as support. We could be pulling back to that level. But if I do another Fibonacci retracement, going from the low of $12.35 up to today's high of $15.52, we can see that the 382 also corresponds pretty nicely with that high from October 25th, right around $14 a share here at $14.31. Going lower, the 50% is right around $14 a share. The 618 is right around $13.50. And then the 786 is right around $13 a share. And that does correspond with the bounce that we saw here on November 15th. So I find that to be kind of a compelling level that price could be coming back to. But just like the other ones, we do have a gap down here. November 8th closed at a price of $12.53 marked there. And so again, I'm just going to make that dashed thick and blue so we know that there is a gap down there. So yeah, I mean, I could see this retracing to, if not just coming back to the 382, that's about a 5.5% drop to the downside. If we do look at filling that gap, that represents a 17% move to the downside. So good to be considering that. But yeah, overall, I am pretty excited about KOLD being right around $55 a share. And so for me, I think that there could be a very nice trade from right around this level. If it does dip lower, I think that could be some nice dip buying opportunities, and that could represent about a 20% move to the upside to be testing this 382. Beyond that, though, I think it might just be getting a little too risky, a little too hopeful getting to these higher levels. But anyways, I'm excited about this, and I hope you guys are too. But, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching, and take care, you guys. Cheers.